YouTube is offline. Sending data. Are we on? Maybe. Well, we're still live on Twitter. So regardless, I'm going to bring Strazza on. The show must go on. Not sure what's going on here with YouTube today, but okay. Or maybe we're live now. All right. All right. I don't know what's going on. Steve, are you here? Sure. Whatever. Gonna be one of those days. It's one of those days, sir. YouTube having all kinds of issues, so I'm going to drop the links to our Twitter in the chat so everyone knows where to go to find us. Because we got people that are waiting, but they don't know where we are. So, how are you? How are you doing this morning?
I'm doing good, Spencer. Looking through some earnings reports.
Oh, it's a big day today. Big day today.
Does everybody own enough of the home builders? You think?
No, doubtful.
Probably not. Yeah. Rocket Mortgage soaring to the moon these last two sessions. The squeeze is on, up huge again pre-market. We talked about it. We said this one, when it goes, it's really gonna go. This is a crazy short interest. It's been coiling for so long. Man, they set this thing off. It's breaking out. I think it has legs. I think it's just getting started. I think the whole housing theme, the whole builders theme, just getting started, right? These patterns, these little coils, these little tactical bases, call them what you will, they just resolved, right? And we talked about that, how looked like they were starting to go, looked like they were ready to go. We got a false start, 2 weeks ago, right? Failed miserably in a lot of the home builders. And we said, well, earnings are around the corner, right? A lot of times earnings will be the catalyst to break a pattern out. And that's exactly what we saw yesterday. D.R. Horton having like its best day since the financial crisis yesterday. And even at the index level, this is starting line momentum. I don't know if we have the rate of change charts handy at all. Fonz, you might have the D.R. Horton one. Dude, but that's initiation.
Didn't I see a headline about D.R. Horton's, not that I looked super closely, but like, didn't their like their net income like fell 30% or something like
that? The headlines I saw were more about they're giving more home buyer incentives, but they beat whatever expectations were, which I think were pretty depressed expectations. Guidance had come down a lot. But this is when you want them. This is where you want them. I think if interest rates cooperate, home builders could be the single best industry group of the back half of the year. I think this move has legs. What do you think?
I mean, no. You've talked about them. They haven't really gone. They haven't left the station yet. And if you're looking for, if you're feeling the FOMO in other areas, right, then look for the trains that haven't left the station. Home builders have not left. Lennar is barely off the mat, right? So,
how come you didn't listen to me and buy yourself some now?
I'm not talking about myself per se. But I will have you know, Steve.
Mm-hmm.
Was it yesterday? I guess it was yesterday. Maybe it was the day before.
The Baba?
I'm playing ball. I'm playing some ball and some Baba. All right. We are involved. We are involved in the Alibaba. I almost forgot. This always happens to me. I always we end the show and you go into your portfolio, and I end the show and I go to do other things and I forget. And then it's 2:00. I'm like, oh crap, I haven't done anything yet. So, that's what happened. But I'm taking a little nibble. Did you see this Krispy Kreme today? It's up 35% for
the nut.
No reason.
Absolutely taking off. A lot of these spicy little restaurant chains have some nice short interests and are probably worth paying attention to right now. When's the last time you've been to a Krispy Kreme or had a Krispy Kreme donut?
I have no freaking idea. I mean, I was in Penn Station last week, and there was a Krispy Kreme there. That's the only one that I really know that exists. So, no, I have no clue.
All right. Well, you're helping me make my point. I'm shocked that this brand even still exists. I never really see it anymore. They used to have like the Krispy Kreme stations and a lot of the gas stations on the East Coast. I don't even see that so much anymore.
I don't know. Oh, actually, I used to live near like a large Krispy Kreme store. It was quite big. I don't know if it's still around. But anyway,
when I was a kid, they put one in Milford, Connecticut, and when it first began, it was like lines wrapped around the building kind of thing.
Yeah.
The next year, all the lines are gone. We talk about this, right? Hot and cold attitudes towards a lot of these retailers and brands.
Yeah, that's actually we were talking about that with Jeff. I was yesterday. We were talking about like the long-term charts of Lulu and Guess. These are like high-flying retailers from yesteryear, and like that's the beautiful thing about consumer taste is they're always changing. There's always going to be a new favorite. So it's all just it's a rotation. It's a cycle, right?
Abe says Krispy Kreme still got it. All right, I trust
if you say so. I donuts are like the most overrated food there is to me. They do nothing for me. So I'd rather have literally almost anything else than a donut.
Spencer.
Anyway,
are you paying attention to the earnings news? Do you have any news for me?
I mean, look, this like the big ones are going to be tonight. Okay, you got Alphabet, you got Tesla. That's the and Chipotle to me is like. Chipotle is like a tier B. Those are like tier 1. Chipotle is like a tier 2 report. I do care about Chipotle quite a lot. We got a lot of like tier 3, tier 4 reports this morning. You got like AT&T, don't really care about Texas Instruments, don't really care. Thermo Fisher, GE Vernova, Boston Scientific, Fiserv. I don't really care about any of that, right? So Fiserv is down 14%. That's kind of that's your leader on the downside this morning, FI. But I don't really care about any of these reports, so I haven't looked too closely at them, to be frank. I am, like most people, going to be watching the Google and the Tesla reports tonight, see how those react, and tomorrow. But no, there's not a lot that really interests me here on the earnings front today. I mean, we have elsewhere tonight, you got IBM. Don't really care about that, right? Do we care about ServiceNow? Do we care about T-Mobile? Do we care about CSX?
I care a little bit about ServiceNow.
Yeah, maybe a little bit. Do we care about Las Vegas Sands? Not really, right? Nope. When's the last time we talked about a casino stock? Nope. Like a real brick and mortar casino stock on this show? When is the last time we talked about Wynn or MGM?
We talk about the new casino stocks, right? The young kids, they're not going to Vegas anymore.
You guys know that Wynn is still around? And do you know MGM is still around? They still exist. Oh, man. Las Vegas Sands is not even in Las Vegas anymore. They sold their Las Vegas properties. They're all in Macau. Look at that Las Vegas Sands chart. It has done nothing for 15 years.
I want to talk about Coinbase.
More than that.
I want to talk about Coinbase quickly.
Coinbase?
Yeah, do we have a Coinbase chart? Spencer, how big is this company?
Bigger than Robinhood? Bigger than Schwab?
It's a hell of a lot bigger than Robinhood. Yes. It's not bigger than Schwab.
Wait,
$100 billion.
I'm confused. Are we live on YouTube? No.
It's $100 billion company. Coinbase. So they're absolutely massive. Stock has 10x'd itself this cycle. But more importantly, this company's got like $10 billion in cash just sitting around. $8 billion to be exact, when you back out the customer deposits. Why doesn't Coinbase go buy a regional bank? Hear me out. On-ramp them, right, in the regulatory landscape. Get them already registered with the OCC, FINRA, other financial regulators, right? Companies do. SoFi did this recently, bought a regional bank to basically just help them from a regulatory standpoint. You have on-ramps to IRAs and other businesses. Why shouldn't Coinbase offer a full suite of banking services? Why shouldn't I have my Coinbase account? You know what I could do in my Coinbase account that I can't do with my Schwab or my Interactive Brokers account? If I have a money emergency, I can click a couple buttons within 60 seconds. I have cash available on Coinbase that can be transferred instantly to a bank account or wherever I want it to be transferred to. I can't do that on my Schwab account, right? People understand the settlement process we have, I think, in US capital markets, right? I can't go sell the stock and then immediately use that cash. Coinbase, you could do that. That's incredibly powerful, but you can't do all of the other banking things.
Right. I was going to say Coinbase ain't a bank.
It could be, and I think it should be. Oh. And they have plenty of money. They can go and buy one right now, and I think they would get them on the cheap. They could absolutely steal a regional bank right now, a pretty large one, probably. And I think it's happening. I think that's what's coming. Those are your next steps for Coinbase. I think they just go full money center and start offering full suite of banking services. What do you think? Tell me I'm crazy. I know I'm not.
Could they? Sure.
$8 billion in cash.
Should they?
Yes.
I don't know.
They could issue stock if they wanted to, right? Like they could easily purchase a bank right now.
Yeah, but who wants the headache? Right?
I don't think so. I think it works. I know it sounds crazy, but it works for them. They want that. They want to be in that world. They're doing all these deals, all these partnerships with TradFi. Why not just buy one?
Yeah, look, why not just buy a bank? I mean, there's hundreds and hundreds and hundreds of banks in this country, right? We have too many banks as it is. So yeah, they could probably just buy any one of them. But I don't know. Then you're talking about, you know, the crypto regulation over here and the banking regulation over here, and they're two different things. And I don't know. It just seems like more trouble than it's worth to me.
But they're basically, what it would be is you're buying the regulatory licenses instead of applying.
Sure. Yeah, right? I don't know. I guess I really haven't thought about it. I guess it's
a big business, Spencer. They could offer hybrid portfolios, right? If you buy a regional bank, then you automatically have some sort of on-ramp or pipeline into asset managers, RIAs, high net worth clients. You could sell crypto custody.
I mean, somebody, if not them, somebody probably will. I mean, will do this. Silicon Valley Bank tried this, right? So,
I bet they would love a little deposit business.
Or what was the bank? Silver? What was it?
This would reduce their dependency on crypto market cycles as well. I mean, this is a boom bust stock right now. They're looking for ways to kind of insulate themselves during a bear market. What if they had a little traditional banking business on the side?
Well, here's the good news for them.
It sounds really good. If Brian Armstrong is out there, call me, man. I think it's the right move.
Here's the good news. It's not a bear market. It's a bull market, right? Speaking of bull markets and crypto, I want to quick programming announcement. Strazza is going live with Louis this afternoon on the channel. It's also on our site. I'll drop the link in chat right now. Louis has been pounding the table for months on Ethereum. He was right, and he has a new call. He is pivoting. He's shifting his focus away from ETH onto a different crypto and all the subsequent plays that fall below that crypto in that ecosystem. And they're going to talk about it today at 4:00, right?
Dick Butts and Donuts is the title of today's show. I can't wait to talk with Louis about crypto today. Crypto is so exciting right now. I think it is going to be an altcoin summer. And yeah, he's got some new ideas. I got some new ideas. We're going to get on there and talk about it.
I mean, I wouldn't even say it's going to be. It clearly is in altcoin summer, right? Summer, believe it or not, Strazza, summer's like half over here.
You're right. You're right, Spencer. we're in the middle of it. We're in the
we are in the thick of an altcoin summer as we speak. We are in the thick of an altcoin summer and just a raging epic bull market with crazy moves every day. I see Open Door down 10% this morning. You know, that's been like the high flyer of the week, the last couple weeks. So it's that we're now on day, I guess you can call this day 3 of the weakness in Open Door, but anything can happen. We're talking about Donut this morning, which we haven't talked about on this show maybe ever. You know, animal spirits are still alive and well, Strazza. So things are happening.
They're getting better and better all the time.
Yeah. Well, you were talking yesterday about the breadth expanding. You're talking about home builders. You're talking about like actual stuff. I'm talking about like the sketchy stuff, right? You know,
the crazies. The crazies are out here.
For sure.
Are out.
For sure.
Eastman Kodak. This Kodak stock looks like it wants to absolutely explode. It looks.
Where? What's the KODK? No.
KODK.
Is it? That looks like it wants to explode to you.
Another one I just got to say that I'm sitting here looking at,
right.
Guys. The CEG and Vistra, right? The power plays. These stocks are just wound up tight, look fantastic. They must have earnings coming up as well. I know these have been names that people, probably been trying to get into. They've been absolute runners. CEG's been sideways all year, right? It looks like it's about to break out now. So it's Constellation.
Oh, wow. I lost track of time. I'm sorry.
Get Kenny on here.
Yeah, let's bring Kenny on, and then we'll bring Herb on. Today's a day. Whew. Kenny, you here?
It's been a long time coming. They ain't cuffing my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Yo. Okay, guess that chart. I've probably never heard of this stock, and I can't see the ticker.
That's the tracking stock for Ripple.
Okay.
Yeah, just sold off. I don't know. But I'm doing more dumpster diving. You guys nailing it. Donut. Yeah, that's right.
Okay, this is what I love about you, and this is what I love about sort of our community here is we're going to talk to Kenny right now. We are talking to Kenny. Kenny's going to talk about how he is buying and selling and buying this today, right? That's what he's doing. He's going to probably do both, if not already done both. Then we're going to talk to Herb. He's going to talk about how this is all bullshit, basically, right? So, but first, Kenny, what's
big
the
fan of Herb, by the way, trying to keep rational thought alive in the market. Yes,
look, give him credit. It's a valiant effort in an irrational time.
Right. I'm with you. And it's when it comes back, it's going to make this market ugly. The dash for trash is a real thing, but right now we're still dumpster diving right now. By the way, speaking of dumpster diving, you guys heard of this thing? I just found this. My buddy was giving them out at his wedding back in the day.
Dude, I had a dream about my old iPhone.
I was looking for my GoPro camera because I wanted to talk about GoPro today, and I found this. This is awesome.
Yeah,
this is when I was like, wow, this is a pretty cool device. This is going to be big. I should buy Apple stock at $8 at the time. So,
dude, the wheel was transformative,
revolutionary. Yeah. I remember when it wasn't skipping. I was like, wow, it doesn't skip. This is amazing.
Crazy. Anyway, so all right, this is the donut chart.
Yeah, the donut chart. We caught onto this one a little bit late yesterday, but listen, at least it's something you get your hands around. This is just coming out of that same pattern, and at least it's something this is a company actually you could say you've ate there or you've had their donuts and this company. It's not some weird Chinese wannabe car share company, but
that's true.
Again, I like the chart still, and we were just looking at this the bigger picture. This is a 3-year chart, and it's got some room to run to maybe 8 and change. So I'm not sleeping on Krispy Kreme. I held it overnight from yesterday. I just sold into this move because I like selling the gaps and hoping for the fades. But it already had a couple of fades, and they're still buying this thing. But when you're buying stocks like GoPro, right? this is where we're at right now. This company basically is done. I mean, they have a great product. Everybody bought it, and then there was nothing left to do with the company. I remember they tried to make it seem like they were going to create their own ecosystem. It was going to be Apple. Nah, it's a camera. That's all it was. And you could strap it on your head. But when stocks like this are still running, we are still in the dash for trash. But let's rock, because this stock was pretty damn good today. So here it is. And again, you don't have to be the first ones in. That move I'm always talking about, faux show, bro, VWAP breaks. There it is. Fake out, shake out, VWAP break. You're buying the stock at $2. It just went to 270. So even if you're not the first or second ones in, you don't have, it doesn't matter in this market. These stocks are running like open. And here's my sleeper pick from yesterday was CDLX, another one just coming out of the doldrums. 2 got us 375 yesterday. This is ridiculous. This is the greatest market ever. But I think it will end with a catastrophic 5.5% sell-off. But and then what? But other than these crazy stocks, going back to the bread and butter, we had a wonderful trade in Coke yesterday.
I was going to ask you about that because when I think Kenny, I don't think Coca-Cola.
Right? You want to see perfection. This is perfection. So it's like we got the fake out, shake out. We got the VWAP break, blue line, orange line. This is the trade. 3 years now, no losses. That's the setup. So we had 3 more yesterday. RTX. And again, these
wait. Go back. Blue line, orange line, and then orange line to blue line?
Yeah. So that's why Coke was pretty interesting yesterday. I didn't play the short, but
okay.
Again, when you have your entry and your target and you nail it, just let it go there, right? I mean, you could have got a little savvy with it and played it again, but we were happy Coke worked. We got our $1.50 out of it. But RTX was actually the better one, because this one was just perfection right there. Fake out, shake out under the VWAP. There's the break. There's the sell. So blue line or orange line. It took a little while to get there, but still your entry point was 145 and we're selling this thing at 150. So, and we had some 148, 149 calls in the middle of that. So it was a decent trade. And, you talk about boring. You got Coke, you got RTX, and then you got Halliburton, which, again, if you notice, all these charts are the same because this is the setup that I say works every time. It works every time, baby. Gap down on earnings, breaks the VWAP, goes to the orange line. And that's kind of where she lived. And, we held this one all day because it never broke back below the orange line. Once it got over it. We had some $21 calls. Wasn't too bad, 50%. So again, bread and butter trades, and then you got the crazy names, and then you got all these stocks that are breaking out, like your friend Sedge. What's up, Sedge?
I want to bring on Herb right now with you, because these are all stocks that Herb has talked about or written about, right? Recently. So Herb, are you good?
Yeah, bring him on. I'm a fan.
Yeah, let's do this.
We were sure.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Herb,
Cheers,
what's going on?
What's up?
How you doing?
All right.
Hey, Kenny.
Herb, what do you make of this? We're talking about Krispy Kreme and GoPro and solar.
You know what I make of it? As I say, scraping the bottom of the barrel. I actually reposted something this morning when Carl Quintanilla had put something up on Blue Sky about this, and I, he forgot Beyond. You guys are forgetting Beyond. Beyond is in this.
We're in.
So
when you see that,
when you see that, you know where you are. But where you are can go forever, as we all know, for a long time until it doesn't. Everybody has fun until the music stops, and then the old chair game, and everybody's scrambling. And remember, I always say this reminds me of 2021 because it just feels like 2021. The difference is rates aren't 0%. So, but instead you have crypto, which helps pull everything along, and then you end up with these crazies going absolutely nutso. So, we've seen this before. A lot of people will learn lessons in this period. And, that's what I think of it.
Yeah, when they're getting
and,
good, really.
And I want to say something. You mentioned Sedge. Let's talk about Sedge for a minute.
Let's talk about it.
Sedge, let's talk about Sedge. Let's talk about Enphase.
Oh, boy.
I want you to know, when I first wrote about Sedge back in sometime in 2023, stock is 90% lower, or got it at its depths 90% lower. If you look at Sedge right now and Enphase, they're the epitome, and they explain why these are silly squeezes, okay? Sedge is the silliest squeeze ever, because if you looked at it and you knew and you understood the fundamentals of it, you would understand. But if you look at it from the perspective of, look at Sedge. Sedge is soaring. Enphase isn't soaring. The difference, the amount of short interest. So you have one that actually just calls out to the likes of JC and your crew and all those folks who are probably watching this. And then you have Enphase, which hasn't joined the party, at least not yet, and maybe it won't because it doesn't have the short interest. But the reality is these are almost like one-time shots. These are companies that are getting a lot of pull forward of revenue because people need to get their solar and whatever. And they don't even talk about Tesla over here, which probably is the spoiler in this solar market. Tesla doesn't talk about much its role in solar because people think about it for cars. But the reality is they're the cheapest guy on the planet right now with their batteries. The whole world of what you do with solar, what I would have put on my house 5 years ago and what I put on today, and the way I create my solar system is very different. So you look at the reality of it, Sedge is flying. But I could argue that this too will be one we will remember. And after a quarter, it'll rise into the quarter. And then after the quarter, people get a dose of reality here.
Just so you know, Herb, anytime you mention shorting Tesla, a bear gets his claws. So
this is, well, let me tell you, I always joke about when I drive up to the Bay Area, I go back and forth to the Bay Area about 4 times a year, and I count Tesla car carriers when I'm going up, because between LA and San Francisco, I'm in San Diego. So by the time I get just on the other side of the Grapevine or through up into the Grapevine, which is the distance, this big mountain between LA and the flatlands where you're like 5 hours just driving straight through the Central Valley. You see going the other direction from the cutoff to Gilroy, which is near Fremont, which is where they go. You basically see car carriers. And the car carriers, it used to be back after COVID, I've been doing this drive for about 5.5 years. After COVID, you couldn't keep count of the number of Tesla car carriers. There were so many. And then it started to drip off and drip off. And I remember one drive, we were going up there and there were virtually none. And that was right when sales started to really fall. And I was just up there recently, and I think I counted 8 going up and 2 coming back, something like that. It was no great shakes. So it has nothing to do with, short or long, just telling you what I see.
Yeah. All right, Kenny, I know you got to go. I'll let you run. But Kenny, look, everyone.
I got a sleeper pick. I'm a big fan of Shatner, so keep an eye on Kirk. That's where we're at, people. Kirkland is catching a bid.
That's where we're at.
Dumpster diving some more. I'll see you guys
Kenny's
later.
Going live at 11 o'clock today, right, Kenny, on the channel? Is that the move?
Yeah. I'll be doing 11 to 12, and I got to skedaddle.
All right. We'll see you there.
Good seeing you,
Herb, so what do you make of the fact that we're in a bull market, like I said earlier, and there's 2 kinds of bearish things that you could come out with. You could come out with one of your patented like red flag alert reports, like a deep dive. This company is overvalued because of X, Y, and Z. And then you wake up this morning and Krispy Kreme is up 30% because it has a high short interest apparently, or no reason whatsoever. What do you do about that? They're two very they're so different.
Look, I don't tell anyone what to do with anything. I think, my whole mantra, it just sounds so stodgy, and I understand that. And I respect that people don't understand that. It's all about respecting the risk, right? So there's risk in these markets, and all you're trying to do is understand what could bite you one way or the other. And they're not all companies like the meme stocks that we know are going to have their moment in the sun and get killed again. Yeah. But it's with the other companies that just may have fundamental flaws, and they're companies you don't think about, but they populate people's portfolios. And I know that the group watching this show, there are diehard traders in there, and all they do is trade the VWAP and trade the this and trade that. I get it. But I also know in this group, there are people who have solid portfolios. And sometimes people get complacent with their portfolios because this has been something that's made me a lot of money over the years. And I try to come out basically and point out some of those where there may be additional risk, even if the stocks have already fallen. So that's the part of the market that's sort of forgotten over here when everybody's having a party, that there's still some sober people in the room and they're watching everybody and they're watching them make fools of themselves or make a lot of money. Some people are making a lot of money in this. I get that. Well, but you also have to just be cognizant of the other side, and you always have to be cognizant who's on the other side of the trade. It's just whether you're long or short, you have to be.
Your mindset shift in a bull market versus, a year like 2022. 2022, everybody was sober, right? And the whole room was sober, and that right.
2022,
right?
So
everyone smacked around. Now everyone's getting drunk again. You're not. Everyone else is, right?
Well, because it's not who I am. I see somebody ask a question here. One hole ask a question here. So is Herb a fundamental trader or a value trader? I'm not even a trader, guys. I don't trade. I have my own little portfolio over here that is very much not traded and has a lot of cash in it. That's not what I do, because my background is a very different background than everybody you're listening to here. And I think you need to have that voice in the back of your head just to remember. And if you're new to this market, you'll learn that. You'll understand that in some point here, possibly in the not too distant future, or maybe longer out. I don't know. But I always like to point that out, because people who don't know me don't know my background. Has basically been a journalist, but I've been somebody doing this for 50 years, basically as a stocks journalist. So I've been following stocks, all markets, over that span of time.
But what about in times like this versus a year like 3 years ago, when you're putting out skeptical reports in a rising market versus in a falling market, does that change your perspective? Do you get more frustrated because things are going up and it doesn't make sense to you, or and you see the greed out there, or do you not care?
I'm agnostic about what people do with what I write. I just know that there's certain things that call out to me, and I know them when I see them. So there's certain types of names and certain types of stocks that I'll look at that get me excited at any point in time. But there is a level of frustration. Just about a week or two ago, I was talking to some friends, and I put out some long report on something. I think it was on G3 Apparel or something. And I thought to myself, does anyone even read these things anymore? You spend a lot of time putting them together. Part of my discovery process is the writing, because when you're writing, you really start to understand what you've got right and what you've got wrong. And, and I love doing it, but you sometimes then think to yourself, does it matter? And that I go through those phases. And by the way, usually when I'm asking, does it matter? That's usually some sort of near an inflection point. Now, I say that knowing that increasingly over the past few years, what used to be a sign of an inflection point from someone like me who's not looking at charts, I'm just having a pattern recognition here, isn't the same inflection point it used to be. But we've also had structural changes in the market. And as a result of that, you also have to be respectful of that and know that things may change. Like you see at 2021, you say, oh, we'll never see this again for many years. And here we are at 2025.
What changes are you referring to?
I'm talking about the changes with pod shops, so certainly, and again, I'm telling you what everyone will tell you. The creation and the rise of pod shops and the way the trading of those shops and the need to be neutral at the end of the day causes a lot of scrambling. The quants layered on top of that, the algos, not just the algos hanging on every headline, but the algos seeing what happened in 2021 and then being able to prepare for trades today. There are many other things that are going on that are, split second beneath the surface, that are moving things one way or the other, that have absolutely nothing to do with the underlying, I'd say the underlying fundamentals, but what's really going on at the actual companies. Because even guys like you or guys like JC will talk about, I don't know what the companies do. The algos don't know, nor do they care what the companies do. They'll trade off the headline. They'll trade off into whatever it is at that moment. And that's been something that's been occurring over many years, but it's now happening at supersonic speeds and just getting faster and faster. So it whipsaws you, and everybody then needs to understand their own discipline and figure out what works for them.
I do want to give you your flowers, and we'll talk a lot more about this next week. We'll be doing a special event with her, but I guess it was about a month ago, maybe more now, you called out a legitimate, an actual scam. Different than not a red flag, not this stock is overvalued or this company is shrinking when they say they're growing. No. This is a legitimate scam in the truest sense of the word. You called it out, and then a few weeks later, it all hit the fan.
It wasn't a few weeks later. It was a day later. It was something
a day. Really wasn't a day. It was the next day.
No, if we look at it, I think it was a day. Maybe it was a week later. I thought it was almost like a day later. I call out. Maybe it was like on a Friday, and then on a Monday. I'd have to go look at it. But we're talking about these WhatsApp stock scams that I've sort of suddenly found myself writing about. They're very interesting. And these are issues where, these are situations where you have these companies that people end up getting into WhatsApp groups that are promising them insider information. It's often people who don't know much about the markets, but they now feel like they're an insider because they saw some ad on Instagram or Facebook or TikTok, and they're pulled in because it's me, someone, an impression, an AI impression of someone like me, basically telling them to join my club, which of course it's not me. And then it's AI impressions, or it's impressions of real financial planners, people you've never heard of, who are now running these groups. It's their pictures, it's almost their firms with some tweaks to it. And so it tries to create some legitimacy. This is quite a scam. And it's a whack-a-mole scam, as I call it, that is happening around the world. But anyway, this Austin technology, I wrote about it. It was about $7. Maybe it was a week. Yeah, $7. I look back at it a week later, 2 weeks later, something like that. It's $9.
It's $9.
$9. What's this doing $9? The day I happen to look at it and think, what's this doing $9? Even went back and forth with some of my friends. Boom! That thing went down in a heartbeat. Like literally, it went from 9 to 5 or 4 to 1. Yeah. We're talking about in hours, and now it trades about 11 cents.
Yeah, not 9 to 5 in the course of a day, 9 to 1 in like 5 minutes, right?
Yeah. Well, it was more than 5 minutes, but it was just the rug pull, as they call it, actually occurred over the course of several hours because the thing was halted, and it was quite interesting. But this is just, by the way, this is just one of, it seems like increasingly many that are out there. You had, the FBI is actually investigating this one. And I think it's something that is quite unfortunate, because I've heard from people from all over the world who have lost hundreds, some of them hundreds of thousands of dollars. And these are people who know.
I saw in your report, I saw like an AI video of David Costin from Goldman Sachs. Like, David Costin from Goldman Sachs is not inviting you to join his WhatsApp group, but you can make a video that says he is, right? I'm kind of surprised that this, I guess you can call it a modern day pump and dump. It's a pump and dump just with social media and AI. Kind of surprised we haven't seen this before. Maybe we have, and we just haven't paid attention to it. But you call it a whack-a-mole. How do you even stop this? It's not like,
I don't think you can stop it because it's worldwide. Because the people who are calling me, who are victims, are in Israel, or they're in Asia, or they're in South America, wherever they might be. And many of them, of course, in the United States, but they're in Europe, they're here, they're there. And they see that I've written something, and so they gravitate to perhaps to me, as hoping I can help them. I don't think you can. They have the FBI actually was able to claw back some money that was in a U.S. bank from one of these groups, the group that is in Malaysia. But there is, they just go from one to the next, and they're very clever, and the wording of their come-ons is extraordinarily clever. But remember, they appeal to people who just feel like, oh, this is a can't lose. And they're new to the markets, and they're pulled by the greed. They can make a lot of money just listening to these guys. And what's really clever, most clever about it, is they come in and they basically, the group, the people that are pulling you in, and they'll give you a stock or two you can make money off of. But then they get you to send them more money deposited, and then anyway, it's just it's pretty horrible.
So those are like the actual scams. Can't really stop that. But then the real meat of what you do is not that. Like you said, you kind of fell into this world. What you're doing is you're looking for red flags, companies that maybe you don't want to buy. Do you feel like your red flag list in a time like this is getting, I don't want to say unnecessarily long, but maybe too long, because maybe there's almost like too much froth out there? Or do you like keep it tight?
Well, my list is an ongoing list. Once something's on the list, it's on there forever, meaning it's only on there for transparency purposes. The list dates back to May of 2023 when I started it. So it's on there for transparency purposes. Some of those possibly and have turned into longs, but I just keep them there so you can see. And if anyone who wants to just do a back test and see where these were at that point in time, have at it. I think it's important to remember that these are companies where there is inherent risk, or there's potential risk. I don't get them all right, but I will say that if you looked at my list, out of 35 names, 36, 37 names, a handful of them have, made me look foolish. Some of those because they become memes, But the rest, which I want to stay away from, and I'm trying now to stay away from the memes or anything that has even a hint of it, because it's a waste of my time and brain energy, just the emotional energy that goes into it. But when you watch something go that far against you for, no real apparent reason that quickly. But I think that, from my perspective, you just have to, continue. That's my discipline. I continue to fly those red flags because I think it's a necessary part of a market, especially the frothier this market gets, the more I think people need to be reminded there's another side.
Where do you typically look for red flags or things that could become a red flag? I would imagine you do a lot of work in Edgar, the SEC database. I imagine you're looking at financial statements, but like where do you look for this? I mean,
it's not looking for. I'm listening. Mostly, my network is pretty broad, so my network will start with lots of ideas are coming my way, and then I have to figure out which ones I'm actually interested in and that I really want to, that resonate with me, that I want to actually spend the time looking at. Like I was looking at a software company the other day. It's got some great elements to it, but it almost goes into the too hard pile. I just don't have the time to try to understand all the components of that so I can say, hey, this is a red flag. And so there are some that after I spend a half hour on, I go, I can't do this anymore. I like to have fun when I'm working as well. So it comes down to my instincts for what I want for red flag. And what I'll do is one of the first things I'm doing is I'm pulling up the charts of the financials and looking at them. And I like charts because charts are easy and I can see what the direction is and sort of mix and match and see if there really is something here. And then I take it from there. And then I just start shaving back. I shave back through the financials. I shave back through Edgar if I need it. I do word searches on AlphaSense for little things just to see if there are trends. Every company's different. The way I approach it is different, but I'm always, trying to get to the point where I can actually start writing. And in that process of writing, I'm starting to figure it out. And there are times I'm in the process of writing and I just kill the darn thing because the thesis is negated.
Do you find in periods where the animal spirits are out that executives or companies in general will get more overt, if that's the right word, with their risk taking or lack of transparency, or they're just willing to do more because they know that risk is on, and when risk is on, people will buy.
It depends on the company,
and they're not going to look at what's on line or page 45 of the filing, right?
Look. Real companies, they're run differently, and you'll see levels of aggressiveness all the way throughout, and that's just the nature of the beast. Other companies like this quantum biotech, you look at something like that, and you look at because you're looking at the narrative half the time. You look at these guys yesterday, they put out an announcement that are investing in GameStop, and you say, what is that? And then you read further and they talk about naked short sellers and shorts. And that's like red flag, meaning they're really trying to, this reminds me of something 20 years ago, Overstock.com, which was the focus of that. And for some of us who have been around, you look at that and you say, this is a problem here. This is not this. What are they writing? What does this mean? You're in crazy times. No, I just think it's the way the market starts working. And I think if you look at it's really about the way the narratives around some of these keep, pulling investors in. And some companies are very clever right now to play into the narrative. Yeah. But the bigger companies some of the companies I'm looking at, they're just companies that people have forgotten about. And they're sitting over here in the real businesses, but maybe their models are breaking or broken.
Overstock still around, by the way. New name, new ticker, but BYON was Overstock. Is now, I guess, whatever Bed Bath & Beyond is. I don't know.
Yeah, they acquired the assets of that. I don't follow the company, and it became it was the original CEO created Battles with me and a whole bunch of other people, and it's deep history, and
I'm sure
I'd rather not go back there. Time has moved on. I value my health.
All right, Herb. Like I said, we're going to talk to you next week. We're doing a live event. We'll talk more about it in the coming days. You're going to walk through the OST thing, the scam, a little bit more in depth, talk about your process. Very excited for that. But do you have any final words of wisdom to leave us with as we sit here with Krispy Kreme trading up 40% this morning?
Just be careful, folks. Strap in, because we've seen this party. We've been in this party before, and we know how this party tends to end. And if you get guys like Kenny talking about this as well, and you got me talking about it, two very different approaches to the world, you better darn well be on your toes.
All right. Herb Greenberg, everyone. Herb, thanks a lot.
Sure.
All right. It is 9:26 in the morning on the East Coast. 4 minutes till the open, everybody. What are we watching here? Steve, what are we watching?
Capital One Financial, was that earnings?
Yes, it was. Yes, it was.
Popping out of a really nice consolidation. I like to see more and more banks, and it's really credit services more than anything. But I like to see these stocks working. This is really good for just financials as a group. I think the regional banks are about to catch absolute fire.
Steve, here's a headline I saw. This may interest you.
Yeah, I had another one.
ESPN is apparently close to acquiring the NFL Network and Red Zone. I don't know.
From who? Direct TV?
From the NFL.
From the NFL.
They're going to buy it, maybe.
ESPN.
Inside the 5-yard line, as they say.
Wow.
Anyway, thought that was interesting. Okay, let's bring on Mary Thwaites. We have morning from Mary. Yeah, what's up?
Japan. Also.
Oh, yeah. We should talk about Japan. Okay. Trade deal on with Japan. We're all buying Toyota this morning. We're all buying EWJ. We're all buying all that stuff.
You know what's really on? Just massive breakouts.
And we're off by a day here. Should have had Jeremy on today.
Drop the link to the post from yesterday for the chat. This is literally the biggest base in the entire stock market. We had Jeremy on yesterday. There's a vehicle to invest in the Nikkei in local currency. Basically, you can hedge out the yen exposure. EWJ will give you that yen exposure, maybe a kicker, right, in a falling dollar environment. And EWJ also breaking out of an absolutely massive base. You got to scroll all the way out to like the late 90s to see this base really shaping up in something like EWJ. So I think either one, choose your fighter. If you want ideas, I would go listen to the interview from yesterday that we did with Jeremy, because we talked all about different vehicles, many of them which were Japanese focused. So
is this the biggest base in the history of markets?
I think so.
It's a 36-year base, right?
It's the biggest in the sense that this index is so critically important to global equity markets. We've never seen a base that big and an index so important, right? Like this is the Nikkei 225. We had some big bases out in Europe, some of these European indexes, but not ones that dated back to the 80s. So no, I think this is the biggest ever, and you have a vehicle to play it. If you want it in local. So again, if you want to do Nikkei in local, DXJ. No currency impact. If you want the yen exposure, EWJ. I think it's tough. It looks like the yen's about to complete a trend reversal. I kind of feel like short dollar trades, right? That's where we want to be leaning. EWJ might be the better vehicle right now. I don't know. I'm going to own a little bit of both. I think you got to have some Japan in your portfolio. And I like that OpJ that Jeremy was talking about yesterday. I just love that. The Buffett fund.
Even if you just talk, I'm talking about big bases now. You look at the S&P, that took 26 years to recover from the Great Depression, right? This is a 36-year base. It's 10 more years.
And they have some cool companies out in Japan's a nice mix. You get a nice basket out there.
Because there's tech, but there's also a lot of industrials.
There's everything. It's like the U.S. It's modern market stuff, right? It's not. You look under the hood at some of these country indexes, and you're like, what the hell am I buying? A telecom stock in a bank? And like one tech company sometimes, or an energy company. With Japan, you're getting like a normal, diverse mix of sector exposure, which is nice.
Dude, for how many years have you been able to say now do Japan and mean it in like a negative way? That's gonna have a whole new connotation now. Maybe. I don't actually know. I'm just,
And it's been changing for years because Japan was one of those early international leaders with Germany and developed Europe, right? It was developed markets first. And then Japan look at the chart. DXJ, dead money, Spencer, since it peaked last summer. I
know we talked about this a year ago, so I'm sitting over here waiting for it.
Building up the juice. This is the moment you've been waiting for. Spencer's buying a lot of stocks this week, a lot of Asian stocks. I think he's in the market for some Japan. Add some Japan to that China, my friend.
Yeah, maybe I do.
We're gonna do an update on our Shanghai composite. Put a note out this afternoon with all of the 7 Shanghai composite components. Right. So if anybody is interested in building some anchor positions in the blue chip Chinese tech companies, I'll have updates, levels, and how we're treating these stocks today on the block.
All right, let's bring out Mary.
Oh.
What's going on? Hello.
Good morning. Hey, good morning. Good morning. How you doing?
Good. Strazza says he has to go sell some doubles. Oh boy, he's getting paid.
Getting paid, Strazza?
No, that's Fonz. Not even me. That's how Fonz talks now.
Alfonso.
That's how Fonz talks now. He's selling so many doubles over here. He can't even run the show for us.
Oh boy.
No, but that's good. I'm proud of him.
Good job.
All right, Mary.
Mary?
What are we doing
good
here?
Morning. Hey, so I brought along the BABA chart mainly to convince Spencer. I heard you talking yesterday on the show that you still weren't involved with BABA. I shared the BABA chart last week. It was one of the charts that I brought last week, and
go, Mary.
I was buying it, so I brought it again mainly to convince you. But it's such a great level to know exactly where you're right or wrong. I love when there's just this confluence of you've got the VWAP anchored from the highs, you've got former resistance. We'll see, if we can break through it and it becomes support. So it's about that 120 level, and I love a good base. And so if we get this bearish to bullish, reversal, then all bets are off.
Primary trend investors, pay attention. This is exactly where you want it.
Yes.
You wait years to buy a chart like this. In a name like Alibaba, wow, this is a gift from the market gods. This is a good one.
It is.
This is one you can be big in.
Yeah, it's like you said, Amazon of China. I wouldn't bet against Amazon.
Yeah, go crazy with this one.
So I've been poking around in the space and kind of the China and the Southeast Asia theme that you guys have been talking about. And actually, I didn't bring the chart, but the grab actually is kind of looking kind of spicy right now too. It's kind of still in that sideways consolidation from the last couple of months. But
concerned citizen says, I'm bullish on Japanese women. Yeah.
Great. Wonderful.
You should go to Vietnam.
There you go.
Wonderful.
Also kind of same kind of a base that is developing that, guys, I honestly just got stupid lucky on this one. The square, well, I always think of this as square block.
S&P 500, welcome.
I know, right? So this is, again, it's that kind of same base that I've enjoyed buying over the last several years. This was Robinhood a couple of years ago. And, it's just accumulation. And when is it going to finally break? Because this is one of those I like the ARCI names, especially as we've been kind of since April, just skyrocketing higher. This is always on my watch list. And so I had the VWAP drop from the highs in January, or was that late December? December, I guess. And so last week when we started taking out those when we crossed the VWAP, I got involved. And then, of course, the news hit that it was being added to the S&P 500. And that's just stupid luck, right? But I love a base. And so I feel like you can take this back up to at least 85. Again, that's where the VWAP anchored from the highs comes in with that now what we're seeing as resistance, and we'll see what happens there. But what a clear level. If we're above that level, we've got the reversal in and prices moving higher. If we're not, then I'm going to be selling. And so far, so good, because it's had an epic move here since Friday.
There's a lesson here. What Mary's doing is she's jumping her entry, increasing her odds at a bigger winner. You can do that in bull markets. We do it all the time. You build in the base. I started building in this base Q4 of last year, got stopped out of my entire position Q1 of this year. Because what I'll do, Mary's got the VWAP here from the prior cycle high and then the cycle high, right? The pivot high. And that's what she's using to jump into this base. That makes sense. But you also need an out when you're doing that in the event that maybe it's not accumulation, right? So I used the VWAP from the lows and we blasted right through it during the Q1 sell-off. So I'm annoyed because we've been talking about this rounding bottom, right? This accumulation phase for 3 years now. And Jack Dorsey still this whole time has not showered. And just
nor has he shaved last I checked.
I don't know if I trust it. So I'm glad that they're in the S&P 500. I think like about time.
Steve, I thought of you when I saw this headline last week. It was Friday or whatever. I thought of you right away. Steve's gonna hate this.
I don't know. I don't know how I feel about these guys or PayPal for the long term. But Mary's right. The chart, everything you're saying, the technical analysis here is spot on.
You got to follow the price, right? And I don't know, my fundamental side. So I check out with Square quite a bit online. It's like the small retailers, and I've been seeing more and more of it lately than not. So that's
why I hate Square.
And they all use Square at the farmers
because of Square. Now I gotta feel guilty about tipping in situations that I should never be tipping in.
No.
Anybody else feel that way? You go to Starbucks now, they're like, hey, just before you leave, we got to ask you one question. Take the little box, take my little computer. What's the question? Oh, pay me. For what?
It's a tough question.
I was at Men's Warehouse over the weekend, and when I was checking out,
they wanted a tip too now, right?
When I was checking out, they asked for a tip.
Oh my gosh.
And I was like,
out of control.
Actually, I believe you should tip for service, and they did provide service. I didn't tip in that scenario, but no, you tip for if someone gives you service, brings you something, waits on you, then yeah, you tip. You don't tip for just random Starbucks.
Quite possibly could be the single thing that Europe does well. They don't tip.
No,
they don't do this.
Yeah, we could learn a thing or two. All right, Mary. Besides Square, besides the Baba. Oh,
brought the Pulte.
Surprise.
I know, a home builder, right? Yeah. Yep. Well, hey, that's the kind of market we're in. So for this one, I was talking about this one a couple of months ago too, just around that 100 level. That was kind of my level in the sand. And I got shook out a little bit, and then I got back above, then I got shook out, and then I got back above. So I had an initial position at about 100. And then as we started breaking through, and this is kind of the opposite of what I've done with the Square. So this was an area of support where I got involved with an initial position. And then I was going to add to that position should we close above and take out the VWAP anchored from the highs, which has happened. So this is just kind of a different way of trading and looking at charts differently and using that VWAP as confirmation to add to the position as opposed to what I was doing with the other ones. So home builders, it's something that Steve has been talking about aggressively here for the last couple of days. And honestly, for the last couple of weeks, it's been, Steve, the 3Bs, the biotechs, the banks, and the builders. Yep.
And the builders are my favorite B. I think, where's the target for something like this? Mary, you run it back to the high?
Yeah, definitely.
Why not? Do we have one of those overlay charts?
The semis did it.
Yeah. Do we have the homies overlay? I know. Even the housing index, we have like a custom housing index basically back at those old highs. Depending on your time frame and who you are, look, DR Horton's up 16% yesterday. You probably want to take some profits, sell your doubles, do what you have to do. Pay yourself along the way, but this is just starting, and why wouldn't it look like the others and head back towards those old highs?
Yep. So this was my vehicle of choice. Got a couple of others, but I was messaging Steve on Monday, like, I don't feel like I have enough homies. Where should I be looking? And
I had a couple hundred shares of Lennar got exercised on some options, and I was holding it, massive portfolio overweight. Holding it. It was up a little bit, down a little bit. It was driving the performance of my account for like a week or two there. Got spooked out of it right before the moment it went. So I loaded back up on some nail, and I wish this move happened a week ago, to be completely honest. We're making money. It's fine. Could have made a little bit more. The timing.
This is my violin I'm playing for you right now. I feel terrible.
When you're doing, look, like our DHI position is these are 8:15 calls, right? So when you're trading such short dated options, like that timing, whether it starts last week or this week, does impact, your performance on that trade. So we're doing well. We're doing very good on our home builder positions. Could have done better is all I'm saying.
All right. All right, guys, let's wrap up. We got to go. Kenny's going live at 11 o'clock, not noon today, 11 o'clock on the channel, the long and short of it. If you are a member of Hot Corner, you'll get your weekly video today. If you are a member of All-Star Options, Sean's latest masterclass is today at 3 o'clock Eastern Time. Don't forget the stream with Steve and Louie right here on the channel, 4 p.m. Eastern. Louis talking about ETH and his next big play. And then at 5 o'clock, Riley Roseby's going on to talk about the future and he's always looking at moonshots, right? And we are in a moonshot environment. He's basically our Kathy Wood, Riley, right? So whatever he tells us is happening in the future, we just believe him and go from there. So big day on the channel. Thank you to Herb and Mary and Kenny. We'll be back tomorrow with Jeff Mackey. It's going to be fun. We'll be talking retail and consumer with Jeff. That's what we got. Thanks for watching. Thanks for bearing with us with the YouTube weirdness. That was bizarre today. Drop us a like and be responsible out there.
The morning show, your daily dose of dick butts and donuts.
Okay.
I can't take no loss.